Hello, listeners, and welcome to another episode of Cognitive Dissidence. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Joining me on the podcast, one of my favorite guests, I hope he's one of your favorite guests too, is Chase Taylor. He is the wizard behind Pinecone Macro Research. Check him out at pineconemacro.com. He's one of my favorite macro thinkers to look at. Even when we disagree, I always learn something from reading Chase and talking to Chase, and I can't recommend him highly enough. I always feel a little bit better also when Chase is on my corner. So he chastened me a little bit about my Nigeria pessimism when we get into it on the podcast. We recorded on June 20th. Same day that I recorded with Fonseca. If you're watching me on YouTube, you'll notice that I have the same shirt on in both of our most recent videos. But this one will come out on Monday, so a couple days between now and then. Listeners, if you want to talk more about our investment management services or our research or anything else, Jacob at cognitive.investments is where you can find me. I read everything that comes through. Other than that, cheers and see you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. All right, Chase, my friend, how is it going? How's your week going?
Everything's great out here in the Pacific Northwest. Hope everything's okay down in the Gulf.
I'm having a better week than Zion Williamson, that's for sure.
He's hurt rather often.
He's hurt, and he's got porn stars saying that they're going to drop sex tapes of him soon. So it's you missed that?
I didn't see that. I just figured it was another injury.
No, Twitter is definitely feeding me Pelicans trending things, and it's not a good week in Pelicans Twitter. But anyway, we're not here to talk about Pelicans Twitter or either one of our terrible basketball forecasts. I thought we'd start with you're still pretty doom and gloom, and I appreciated one of the recent pieces that you sent me, and we'll link to Pinecone obviously in the description and everything else. But you've been doom and gloom for a little while. You're the only person I know out there who has acknowledged that the gloom did not come yet, but then has made a new case for the gloom being right around the corner. And I thought some of your thoughts about student debt in particular hit fairly close to home here. So why don't you lay out why you're still feeling pessimistic about the economy going into the summer?
Yeah, for me, it's three things in particular that are kind of front and center. Number one, I'll say that the student debt part, and honestly, just young people in general, the financial situation for Gen Z and millennials is just really bad, and I'll dive into that more. But the other is credit. Typically, credit availability is like a lagging indicator, or at best coincident. Right now, it's leading. We always have like a weird thing where the economy breaks, and then banks are like, "Oh, we better stop lending." But we have the weird scenario now where banks are stopping lending, and we don't even have any like job losses or economic stress that's really hitting yet. Yeah. And the third thing is small businesses, and really that's mostly a function of the first two things. I think you have demand problems because young people are going to have a lot less money to spend, and then you're going to have credit problems for availability of credit for small businesses is going to be a significant challenge. So those three things are all already starting to kind of happen, and while some of the macro data is still like hanging in there pretty solidly, I think the last couple of weeks having initial jobless claims pop over 260,000 to me is a significant move, and it shows us maybe we are finally, and I say finally because I've been saying this for a while, in the early innings of some actual job pain. So far, all we've really had is hours worked go down dramatically, but no one's really let employees go. But I think we're finally kind of starting to hit that period where we actually let go of employees, not just cut their hours or maybe slow their wage gains. But going back to the way I was talking about the young people, I call it the youngins recession. If you kind of look at a lot of survey data or just actual data for, say, delinquencies, young people are really struggling with things like car loans, credit card loans. They're already having delinquencies They're the worst since the tail end of the financial crisis. Go back to like 2009, say. And that's the average student loan payment is a little under $400. Those are going to come back kind of late summer, early fall. That's going to be a big deal because we know from the data that most of these people, instead of, keeping a nice little hole in their budget for that $400, went out and just filled it with new debt. So that, young people haven't even lost their jobs yet, and they're struggling with car payments and credit card payments, things like that, interest rates on all that up. So I just see a lot of stress from young people, especially when those payments come back for student debt. And what I don't think people realize is credit card debt on the aggregate in America is about $1 trillion, and student loan debt on aggregate is over $1.7 trillion. So it's almost 2 times as big as credit card debt. So you're talking about really significant payments that are going to be due for millions of people. Not to mention, if the Supreme Court shoots down the forgiveness, you're going to have a lot of people that thought they were done with all of their loans, or the 20,000 they got canceled. That all might come back. They might get a letter in the mail that's not very fun to read. That, oh, just kidding, you actually owe that. So all that I think is going to be a significant hit to demand.
Do you think there's a flip side of that, which is, the U.S. government has already shown that it's willing to pause payments, and it's delayed the reinstatement of payments multiple times. I mean, do you think that, like, let's say we start to get some of the data that you're talking about, what stops the federal government from saying, JK, you don't need to do the payments, and by the way, we're gonna cut interest rates real fast right now because we raised too fast, too hard?
Well, I do think that last part will happen. I kind of feel lonely in that call at the moment, but on the first part, the legislation that was attached to the debt ceiling essentially keeps the administration from stepping in and just pausing payments again. That's a big part of it. But with that said, just like everything in the federal government, there's always some little like emergency clause that you can pull the trigger on. So I'm not saying they won't find a way to do something at some point, but I think there will be enough demand stress in Q3, Q4 before anyone does anything like that, just because politically, there'll be a problem to give that to the GOP and then kind of take it right back from them after the debt ceiling negotiation. I think McCarthy put himself out there for the administration to a degree, and I think that would be goodwill you would want to kind of undo.
Is there, as you've been like thinking about this and doing research on this, is there any analog to the student debt problem in the United States? I mean, like one of the most striking charts that you had, I think it was in the Emerald piece, was just about the growth in student loan debt from 2006 to the present day. It's been something like 3x or 4x, and I assume it's only going to go up. I'm somebody who had a liberal arts education, was raised by a professor, has been indoctrinated in the virtues of education, and even as a young father, I'm sort of like, oh, is my kid really going to go to college? Like, how much is it going to cost when she's 18 years old? Like, I don't see how it can continue. It looks like a bubble. It looks like a mania, but it's not. It's student debt.
Yeah, I mean, it's definitely a bubble. I don't know about analogs, but it's definitely a bubble. And I know there's been some rumblings of some, obviously it's not going to go anywhere anytime soon, but some legislation from the GOP to try to like rein in the insane growth we've had. And it turns out if you give people free money to do something, they'll spend it. So I think it's been, if you're going to give them the money to do it, people are going to do it, especially when everyone in society tells them they have to do it. So the demand's always going to be there. It's really about not giving people totally free money with no strings attached until, later in life we have to make this payment that they may or may not, turn off and on like a light switch. So yeah, I think it is definitely a bubble. It's something that will eventually get addressed and kind of reformed, but I'm sure the lobbying from these schools that do so well from this is going to be hard to get past. I went to the University of Houston. Every time I go back home and go on campus, I think it's just stunning. The new buildings they're building, the new sports facilities, like, so it just shows you, like, if you have a magic money machine to help on the demand side for your business, like, you have a really great business. I think universities had a phenomenal run for the last 20 years with all of this influx of that $1.7 trillion of loans, not to mention the people that are actually paying their way through. Not that many people can even do that anymore, but yeah, I think it's definitely bubble, but I'm not sure when it's going to crest and go over.
I think one underappreciated aspect of this is my dad was a professor for decades, as I alluded to. And I remember as a kid in the 90s, we were worried his college was going to go under because like just budgets were really tight and it didn't make any sense. And my understanding is what changed was that, yes, there's a 1.7 in debt and students paying, and I guess colleges and universities benefited some from that. But the real kicker for them was that especially wealthy Chinese people wanted to send their kids to the United States to get degrees, and they would pay 100% full tuition, no scholarships, no student debt there. And it was this interesting thing where my dad's teaching political science. He's like teaching Plato and Machiavelli to Chinese former Chinese Communist Party cadres who are trying to get their kids out of the thing. And I've been thinking about the student visa crisis after COVID and how the United States is still being pretty tough on student visas and things like that, and thinking maybe the decline of international students is also going to hit universities really hard. But that's just sort of speculation. The other thing that really struck out to me, and I wonder if you have more thoughts on this, it's one of the first charts you have in the Youngins recession piece. It looks at survey data from young adult men versus young adult women. And 50% of young adult men say they're securing their financial future. Just 30% of women said that. 40% of men said they could handle an unexpected major expense. Just 26% of women felt that way. And just one anecdote, I was speaking at NDSU last week to a group of precocious high schoolers on international trade and agriculture, generally male-dominated fields, for better and for worse. Well, there's really no for better there, for worse, male-dominated fields. It was 40 girls and 6 boys. And I was hearing anecdotes all over the place about boys leaving the university system, boys going to trade schools or technical schools or finding other jobs because they just didn't want to go to college and things like that. And I don't know, that was fresh in my mind, and I thought it stuck out to me in the research that you did too. I don't know if you have any thoughts about that gender gap.
I don't. It's interesting you bring that up because I used this chart in the piece, and to me, like I really took the overall numbers of like how many people were like paycheck to paycheck, things like that. Mm-hmm. That was like what stood out to me, and I kind of glossed over the gender gap, and I honestly kind of wonder how much of that is just like raw overconfidence from men versus women at times. That maybe men are just as bad off, but but you ask a man about securing his financial future, and it's hard for him to say no, maybe, but I don't know.
Yeah.
Well, one of the interesting things there is if you think back the last 2-3 years from the pandemic, how bad just work was for women. But now if you look at like employment to population ratio for women, it's really skyrocketing back, which is weird because I don't feel like childcare and stuff like that's really gotten much better.
No.
At least in my experience. But even if you look at the labor data for people that are employed in childcare, it's still way below pre-pandemic when almost everything else is back to or above it. So I don't know if that would have much of a bearing on this survey or not, but maybe it's something like that where young women still kind of feel trapped, things like childcare.
Mm-hmm. If you're wrong about the impending recession, why do you think you'll be wrong?
I think 2 things stand out. One, construction, because we had the housing start data came out today, which I would not be surprised if it gets revised down because it was alarmingly high. But even if it's half right, you're still seeing some of these cyclical sectors, especially housing, really especially multifamily housing, that's holding up well. Like construction is booming. Now permits are way down. Permits even for multifamily are way down. So we kind of know this thing rolls over at some point. But as of now, you're basically at full construction employment. Historically, typically, that is pretty significant when it comes to recessions. So I think the first thing that pops to mind is that, like, hey, maybe construction is just so good that it doesn't matter that manufacturing is in a recession. And maybe it doesn't even matter that consumption rolls over. Like maybe retail sales can be kind of bad and the manufacturing economy can be bad, but hey, everyone has a construction job, so whatever, we're fine. And the second thing is just government spending in general, I think, and the way of government spending. So maybe CHIPS Act and IRA and infrastructure bill, and because that stuff is it's putting CapEx to work, it's putting people to work. Maybe that is enough to kind of absorb some of the natural downside that's going to come just from the things that I see coming. So do I think that can overcome what I see coming in the credit markets and what I think can happen to things like private equity? No, but if I'm wrong, I definitely think those are two of the main areas that are gonna be why.
Yeah. Anything else to say on that, or you want to move a little further afield?
I'll touch on the credit side a little bit.
Yep.
And like I was saying earlier, typically you have the economy break and then credit breaks. But where we're at now, we're in a situation where you have bank liquidity stress, bank liability asset mismatch stress. That is causing them to tighten up lending standards. Normally it's credit. Normally it's like, hey, people stop paying their bills, we better stop lending so much money. But now it's like, hey, people took their deposit and they went over across the street to a money market to get 5%. That's why they're dialing back lending. So the way I see it is you have like one side of the vice starting to tighten up, and the credit side's at the moment it's largely okay. I mentioned young people are struggling to pay their car notes, things like that. That yes, you're starting to see some stress in places like that. But in general, people are able to pay their bills. Corporations are able to pay their bills. But if we see demand kind of continue to go down, sales continue to go down, everyone kind of expects a big rebound in the second half, and especially in the next year of earnings. If you look at like what people are expecting from earnings growth, it's like a big acceleration. So if that doesn't materialize, especially on a real basis, I should actually correct that and say, especially on a nominal basis, then you're kind of looking at a situation where you can start having some credit problems where people aren't paying their bills, which would make sense with the interest rate reset that we've had. So you might have like two sides of the vice, both kind of clamping down on banks, where you have the credit problems and the funding problems. And I think that can lead to a very significant credit problem where we have credit freezing, where unless you are the absolute best person in the world to give money to, you're just not going to get money. Banks are going to have to really retrench to lending. And that's the kind of thing that just overnight, the economy goes from looking good to looking awful, because with currently we already have M2, money supply going negative at month after month after month. So if you have money and credit both kind of going the wrong way, like the way our economy is structured, it can't really handle that very long. So I think it is important for people to keep an eye on credit. I think it's a very serious situation that not many people are paying much attention to, including the Fed. The Fed is completely, two speakers last week that glossed over this like it was a non-issue, and I'm kind of stunned by that at the moment. I just wanted to kind of just highlight that a little bit more, because I think it's crucial right now.
Where do you hide from an investment perspective if what you're describing is true? Because if the Fed is ignoring it and they're going to keep raising rates, probably don't want to be in bonds or fixed income. But if you're right about the other side of the vice, like equities don't sound like a really good place to be. Maybe that's why you're looking at Japan and things further abroad. But I mean, where can you find performance in the U.S. economy if this scenario is going to come true?
So I think they've already over tightened. So if they do some more, it's just going to be dramatic over tightening. Mm-hmm. But to me, that creates such a shock that they have to go back the other way, harder and faster than people are expecting. So for me, it's being out on the SOFR curve, SOFR futures in 24-25, which is just literally an instrument to bet on on interest rates, policy rates going back down. But that can be found in 2-year treasuries or 10-year treasuries, anything. So to me, treasuries will be fine. Obviously, betting against some stuff is going to be a way to make some money. But to your point, like I am, interested in a lot of overseas markets for this very reason. Like I think Europe is maybe even worse than us when it comes to their over tightening at the moment, because their central bank is actually unwinding its balance sheet, unlike the Fed. The Fed is supposed to be doing up around $100 billion a month, and they've done none for all of 2023. So that lack of unwind has really been a big part of why asset prices have been fine in America this year, because liquidity has actually been solid. Which is funny, because a bank collapsing is largely the reason behind that. You have a bank collapse and you throw liquidity at it, and you kind of ramp everything. So Whereas Europe, they're not doing that. They're actually running off their balance sheet. They're doing it hard and fast. So I think they're maybe more accident prone than the US right now. So I don't want anything to do with that. But then you look at places like Latin America, where they're probably going to start interest rate cutting cycle, and for the right reasons, not the wrong reasons here soon. So I do think there are places to hide around the world. Japan has been my favorite for months, but there are definitely others. And as you well know, Latin America in a lot of ways looks enticing.
Yeah, I got a lot of shit for being optimistic on Brazil 6-8 months ago or at the beginning of the year, and that shit has slowly faded into the background. People are starting to notice that Brazil in particular is doing well, although it's not a one-way story there. Some of my buddies over at Lyceon texted me some research piece that said Argentina was going to clutch economic success out of the jaws of whatever chaos they're in right now. And I know you have some exposure to some Argentine companies, but I'm not sure I'd be playing Argentina general. So there are a couple kind of markets there to hide, but it's a pretty grim picture you're painting overall. What signs are you looking for on the credit aspect to evaluate whether we're headed towards that direction?
Sure. Yeah. If people want to play along at home, it's easy. The Fed publishes data every Friday. It's called the H8 data, where you can just go through and look at it. And it breaks out, you can look at just the aggregate of the bank credit, like what it's doing every week. It went down by, I think, $48 billion last week. It shows you what deposits are doing in the banking system every week. And you can also break that out by commercial and industrial loans. That's one of the big ones I've been watching, because you think about lending to small businesses, that's where it's going to really show up. You can also look at it from like a commercial real estate, consumer loans, all that stuff is all in the data. So I'm watching that very intently. Historically, that it just goes up all the time. So even when this stuff goes sideways, you tend to have, that's because you had a significant issue, and it's already going sideways. Commercial and industrial is going down. Even bank credit as a whole, since SVB is basically down a little bit. It's had some big months down, and as deposits keep leaving the banking system, it just gets worse, because whenever your deposits leave, you have to also trim up your assets, which means you're already seeing some of these smaller banks. They're selling some of these loans to private firms, things like that, at a loss just to get them off their balance sheet, and that to me is just going to get worse. And again, they don't even have that credit problem side of this hasn't really opened up yet, and I think it will. I think that's an area where someone could have a reasonable disagreement to say, like, oh, I don't think there should be any credit problems. The economy's doing fine. But I think there will be. But yeah, the biggest thing is watching the bank credit every single week, kind of charting the path of that, looking at what has done historically, but also the delinquency rates, which you could find. Like Experian publishes some data on these things, and there's a few places. You just like Apollo is always having great charts on what the delinquency rates are doing for whether it be autos or housing or personal loans or credit cards. That's all easy to find, publicly available data. So if delinquencies keep going up and bank credit keeps going sideways or down, then I think you're going to have very serious problems. And really, to me, from a pure macro perspective, the most important data set right now moving forward is that weekly initial jobless claims data. That's really going to show you in real time what's happening in the labor market.
Yeah.
And if the labor market cracks, we know, there goes a big piece of demand. And there's just, at that point, you have a lot of feedback loops that start to fire off, and it gets really, really difficult to stop.
Well, I can tell, just one more anecdote before we maybe move to Japan. I don't know if you've been traveling a lot this summer. I have one more trip left this summer before I get to sort of calm down a bit. But man, is it crowded out there. And it's not business people for the most part. It's not business travel. I was on the road most of last week, and I was gobsmacked by the number of people that were out there. And I wasn't going any place that is thought of as a tourist destination. I was wandering around North Dakota, parts of the Midwest. It was absolutely packed everywhere I went. Every plane was absolutely full, even though I was flying in at midnight. So apparently people are putting the vacations on the credit card and enjoying themselves.
I think revenge travel is definitely still a thing. In that youngest recession piece, I noted how it was like 88% of millennials and Gen Z said they're paycheck to paycheck, but then they they also asked everyone if they plan to splurge. And it was like all the young people were like, yes. And so it's still happening for sure. The one area I think you're starting to see some issues though, maybe restaurants, just pure anecdotal from like restaurants going to like starting to see the crowds thin out. If you look at like earnings call for like Cracker Barrel, say, you could tell like they're starting to see a little bit of a traffic problem and a big trading down problem where whether it be within a restaurant, they're trading down or trading down from one restaurant to another. You're starting to see that, which that's always a big signal. And Dollar General, they said, hey, our people are trading down to food banks. So I think for the lowest, decile, things are already very, very bad. But
well, I take the Cracker Barrel index very, very seriously. If people are not going to Cracker Barrel, yeah, I mean that's the best mac and cheese.
They're getting hit on the retail side and the restaurant side, both. So they had the nasty earnings call.
Well, the retail side, I understand, but if Cracker Barrel is selling less mac and cheese, I'm sitting up in my chair a little bit straighter. Moving to a country that you'd probably struggle to find mac and cheese in it. Let's talk about why you're so suddenly optimistic. Well, not so suddenly. Excuse me. Why you're optimistic about Japan?
Yeah, it's funny you say the suddenly part because like I'm suddenly getting worried because it's getting kind of popular. But honestly, it's really simple. Like when it comes to Japan, they have the easiest monetary policy in the world while everyone else is over tightening. A, like I love that. B, they had such an epic bubble in the late 80s, early 90s that the investor within Japan is so afraid of their own market and has been since then. And for rightfully so, if you put your money into Japanese equities 30 years ago, you're basically flat. But now, and the corporations are very, very tentative. They don't put money to work. They have a lot of cash in their balance sheet. They don't invest. They don't give people raises. They're just super conservative. But now all of a sudden, they're kind of prodding their companies to put cash to work. Go buy back your stock. Go invest. Give people raises, and they're starting to do all of that. Which obviously completely changes just the game from a math standpoint on what these companies are going to do. You're starting to see companies do very significant buybacks, which is pushing shares higher. Obviously, Warren Buffett's like 1 million years old. He jumped on a plane from Omaha to Japan, and I don't think he went over there, just to grab some sushi. I think it was to make sure that they were going to give him a significant return on his capital. And I think the news came out just yesterday, a day before, that he's putting even more money. He's basically tripling down on his Japanese investments. So if it's good enough for Warren Buffett, it's going to be probably good enough for me. So a return on capital standpoint, a shareholder friendliness standpoint, the easy monetary policy, the fact that wages are actually starting to pop and inflation starting to pop for the first time. So you may get into a situation where they have to actually normalize policy a little bit, just maybe move the band on their capping of yields a little bit, maybe get rid of YCC altogether. But even if they don't do that and they just raise rates to 25 basis points and just leave it there, something go from negative to positive, any of this stuff could bring money home. They own over 10% of the Australian bond market. They own like 6-7% of the French bond market. So if Japanese investors decide holding a big stack of government bonds from the West is not the best investment, maybe putting it to work in your really productive companies in Japan, just a tiny bit of movement there is huge because they have $3 trillion overseas that if they bring back just a fraction, is a huge deal. And last year we saw a decent amount of repatriation, and I think that could be a trend that it kind of holds.
I know how I answer this question when people inevitably bring it up about Japan, so I'll lob it up to you and watch you knock it out of the park, which is, but what about Japan's demographics, Chase? They're an aging population, and their economy must be headed to hell in a handbasket because they're so old. Yeah,
in some ways, like obviously that's true and it's bad, but in some ways I kind of see it as a gift. It makes you take productivity serious. It makes you take technology seriously. You have to. Then, at some point, maybe it makes you take immigration a little bit more seriously. And if you do that, that's wonderful for growth. So to me, it's not that bad of a thing. One country we may talk about a little bit is Nigeria. And everyone, I have people say, oh, like, I love Nigeria because of the demographics. Like, yeah, but having a really young, massively growing working age population is awesome if you get them all a job. If you don't, that it's not a wonderful problem to have. So in some ways, you might say Japan is actually in a good spot because they don't have just a population growing out of control. Like, it lets you be really thoughtful about what you're doing instead of, you think about China right now with youth unemployment 20%. They have to find a way to get these people work. And is China going to come up with a really productive way to employ them? Or are they going to maybe, build another bullet train and put them to work on that? And that's, I think, the fear with a place like that, or you pick a country with high, a really rapidly growing young population, is you might have to just find something really unproductive for them to do. Whereas Japan doesn't have to worry about that. Like, if you're going to put something to work, it's probably going to be on something productive. So to me, yeah, it's bad in some ways, and in some ways, it's almost like a superpower.
Yeah, I've struggled a lot with demographics, and I think we're just used to, how for hundreds of years it's been global population is going up and to the right, and the big problem was overpopulation and things like that. And I just, like, the narratives, the strategies, the analysis, none of it is willing to accept that, but the world is actually, like, population in the developed world is going down. So maybe all of our old mental maps and our old mental models are just not going to work when we're trying to analyze these things. And to your point, Japan just managed, the quote unquote lost decades. That's expert management of a mega asset bubble. Like, China should be so lucky to manage the problems that they have in their economy the way that Japan has for the last 30 years. So if anybody's going to be able to manage themselves out of a problem or find advantages, it seems to be Japan. But I wonder if Japan will also have the same problem here that the United States has had with reshoring, which is that reshoring never seems to actually work. The United States government wants capital to come home, and it leaves China, but it doesn't go home. It goes to Vietnam, or it goes to Mexico, or it goes to some of these other places. And I wonder if the move for Japan is less that capital is going to come home, but that it's more going to be, all right, let's go to Indonesia, let's go to the Philippines, let's go to Taiwan, places like that. And the geopolitical risk premium there is high because you're stuck between China and the West and Japan. But I also, I'm beginning to think there's going to be a lot of fruitful competition in those markets, and a lot of cheap money for the countries in the region that do have the demographics and do have to find the jobs. Because if Japan, I think it's a step too far to ask Japan to change its views on immigration, but for hundreds of years, Japan has been thinking about, all right, well, let's dominate Southeast Asia. Let's have Japanese companies be the ones that are dominating Southeast Asia. And that seems to me to be on the table for them. They invest arguably more than the Chinese do in the region.
That's the last point you just made. It was like, if someone was listening, would be like a throwaway little quick thing, like, oh, arguably they invest more in China. There's so many news articles and people tripping over themselves to tell you about a Chinese investment in Southeast Asia, Chinese investment in Africa. But I really challenge people to go look at the data on how much Japan invests in all these places. It is huge. And in many of these countries, it is bigger than China. And in the background, they have a better relationship with a lot of them. Everyone knows they're not trying to take advantage of you, maybe in the same ways that China is in some ways. So yeah, like, I don't think they'll have problems whenever it comes to getting things made that aren't going to get made in Japan, which is plenty. There's a lot they can't make or don't make, and I think they will get a ton of it from Southeast Asia. I think they'll keep really good relationships, whether those countries in Southeast Asia is awkward and that some are kind of more U.S., some are more China. I think they'll carve out their own unique relationships with all of them. The multipolarity of Southeast Asia will not be an issue for them, I don't think, at all.
Yeah,
I think it'll be an asset.
Where are you at with the yen? And let me just tell you where I'm coming from here right now, because I feel 5 years ago, I was writing pieces about how, okay, like, we're not moving away from the dollar as a global reserve currency. I've gotten to the point now, well, first of all, everybody's writing that same article now. And I almost look back at my old articles on that and cringe a little bit because of how simplistic they are, because that's really not the question. And for countries like Japan or even China or other countries in the region, they benefit from the dollar as a reserve currency. It's good for Japanese exporters if the yen is weaker against the dollar. It creates all these sort of virtuous cycles that we're talking about here right now. So I just wonder, because you were talking a little bit about the yen in your piece, and you were talking about hedging and investing in equities and not hedging. But it seems to me, because if the Fed is going to be as single-minded as it currently is, and I think Japan will stick to its guns probably much longer than other people think, maybe there's more room for the yen kind of to decline. And I don't know. I just wanted to throw that thought at you because I'm still sort of baking a new take on the dollar that is a little more sophisticated, but I wonder where you're at with it.
So I'll start this off by saying I'm the world's worst yen trader. Every time I think I know something about the yen, it's wrong. So, but I've been kind of constructive on it, but I mean, this requires the Bank of Japan to do something, and they may not. All along, I thought they shouldn't do anything, that inflation wasn't actually going to like under the trailer and become real for them. But maybe I'm wrong on that, and they do have to do something significant. And if they do that, a lot of money will come home, and that will push the yen higher. But if they keep going lower from here, yeah, I think a little, we're getting close to the point where it's uncomfortable for them. It's uncomfortable for their allies. It's uncomfortable for everybody. It's uncomfortable for China. China was going to start to kind of notice. You already see China obviously weakening their own currency, which makes perfect sense with where we're at macro-wise. But, I guarantee they have one eye on what China's doing. They do still export some of the same stuff. I think it can weaken for sure. Just especially if I'm wrong and rates stay higher for longer in the West than I think they're going to. But if I'm right and the cycle rolls over in Europe and the US and you get a new rate, cutting cycle, what caused that is going to also cause inflation to go much lower in Japan, and B, just the rate differential and alone will help bring the yen back up. So I've been constructive on the yen, thinking a decent chance of some policy changes, even if they're small, even if it's just, take the rate to zero instead of negative and let the 10-year trade to 1%. Nothing earth shattering, but that would be enough to, I think, stabilize the yen. Mm-hmm. But hey, I've been wrong since I've written a few Japan pieces in the last year. And I think in all of them, I probably said, hey, I kind of want the yen exposure because it's been really popular to be long Japan, but hedge the currency. And I kind of wanted the yen exposure and the equity exposure. So far, that's been dead wrong. And I should probably go 50-50 on that or something, especially, with the carry right now. And you could be in a hedged product and get paid the 5% carry differential on the yields and get the upside of Japanese equities, which feels like a wonderful mousetrap right now.
There's a reason don't they call it the Widowmaker? Isn't that the name for the yen trade? Yeah. I feel like.
Yeah, that and the JGBs both, because everyone just bet that their rates would explode higher for, well, as long as I've been alive and trading, for sure. So we're still here,
Before we leave Japan, I think we have to address at least briefly China's role in all of this. We're recording on June 20th. This morning, People's Bank of China lowered the main interest rate 10 basis points, so not a whole lot. Comes after the State Council was debating a bunch of quote-unquote stimulus measures. The Wall Street Journal's coming out with the latest stimulus bazooka piece of the month. Japanese companies have a lot of exposure in China. They're trying to reduce some of that exposure. Some Japanese companies are trying to build parallel supply chains, one that goes to the Chinese market, one that goes to the other market. Japanese strategy is much better at doing that, at sort of saying, yes, we have a competition with China, but we also really need to engage economically with China. Where are you at in the Chinese economy? Because I think actually if the Chinese economy really does suffer, that's actually a low-key risk for Japanese companies, a lot of whom either assemble things in China still or are depending on the Chinese market to consume some of the products that they're exporting.
Yeah, I think it's a very significant risk. I think obviously that it's bad enough to the point where they're talking about stimulus, but my fear is that you're in a situation where the animal spirits are bad enough to where throwing some 10 basis point cuts at it, or maybe a little infrastructure at it, or giving the local governments a little bit of breathing room on their debt, like that, none of that's not going to work. Even housing, like I think you've kind of killed the trust in the housing market to a point where you don't get it back just by loosening up some, like, oh, you can buy a second house in this province now. No, that's not going to do it. Michael Pettis has hammered at this for a long time, and I think he's dead on it. You have to switch from supply side to demand side stimulus, and there's been a little bit of rumblings they might do that, but until they really do that, I'm worried about the Chinese economy like really getting back on track, because with the falling population, with kind of losing some of your manufacturing. Granted, the auto sector's on a rampage, but some of your other manufacturing has moved off to Vietnam or Mexico or something. So unless you do something to get actual consumption up in China, I think they're going to struggle, because obviously I think the demand for exports coming out of Europe and the US is going to be rough for the next year. So you have to come up with something domestically, and adding a little bit of stimulus money or helping out local governments with debt a little bit. It's just not going to do it. And I don't have the faith that they will do the demand side stuff. And even if they do, like one of the rumors I saw was essentially like a direct stimulus, which if you think about how many people live in China and you think about like if you give them all $10, it's a decent amount of money, but what is that really going to do? And then on the other side of that is, how do you actually get all those people that money effectively? Like it's not as simple as getting direct stimulus to a couple 100 million people as it is to go over 1 billion people. So I'm a little concerned on how they roll that out if they do it. But even if they do it, is it enough? They go so small because they have so many people that if you go big, it's a shocking amount of money for the national government. There's a lot of questions around that. My assumption is they'll do some supply side stimulus that is just not going to do enough. It's going to be pushing out a string. Like rates where they're at, it's not what's keeping the average Chinese person going out. Neither is not enough spending on infrastructure. Like that's not what's keeping people from spending. Just
yeah. The mechanics of that is the digital yuan, baby. That's like tailor made for what you're talking about.
True, but does every single person in China have digital yuan? We forget there's still a lot of people out in the hinterlands and on farms. And
if the Chinese government decided that all those people should have digital wallets, they will have digital wallets very, very quickly.
That's
which
true.
is the second
maybe this
point.
Is a great way to finish that project.
Yeah, I mean, go to all the Chinese farmers and say, here's the equivalent of a year's. And this is the second part. I've been saying this for a while because the difficult thing, well, there are many difficult things with demand side stimulus, obviously, but I think the most difficult is that for China to do it right, you're going to have to redistribute wealth. So it's going to have to go from the coast to the interior. And some people shouldn't get any stimulus, and hundreds of millions of people who are still living in poverty in the interior of the country should probably have a lot. So I bet you could get all those people without digital wallets to sign up for digital wallets if you're saying, hey, we'll give you enough stimulus that's 2 years of your annual kind of salaries. But then what happens to all the coastal executives and elites and province officials and bureaucrats and things like that who are used to just making more and more money? That's where it becomes a really
spot on. To me, everything you just described is exactly what should happen. But I think you could argue this. I mean, this shift should happen 15 years ago, and I think it's easy to sit back and say, oh, Xi's all powerful and he makes every decision. But the reality is the elites in the country on the coast, like they clearly have a lot of political power and sway. So I think the industrialists might politically there is more than we give it credit for, and probably keeps these kinds of things from happening even still.
Yeah, the bullish argument there would be that Xi Jinping has spent the last 10 years eliminating all of the rivalries, so that now when he does this, everybody says, yes, sir. But that's also.
What I will say is if they pull this off, they did like a big, large scale demand side, especially redistributive one, then it's wildly bullish for China, really for Asia as a whole. And I think anyone that would want to say that would get run over.
Yeah, Rob and I often talk on the podcast about, he's very worried about the Chinese economy from this point of view. And for me, it might be the eternal optimist in me, but I sort of think of what you just said, because the Chinese know everything we're saying better than we do. They know they must know that they need demand side stimulus. They must have the best and brightest, like trying to figure out what the right way is to do demand side stimulus. And if we've learned one thing about China since 1950, they were not the country to bet against. Like once they know what they have to do, they will generally do it. Maybe it'll be messy or whatever, but they've gotten there in the end. So that's the thing that kind of keeps me up at night from that optimistic point of view, I guess.
Yeah, that's fair. I think it's gonna be tough for them with the U.S. and China both probably in a recession for the next year. But
yeah,
so they better go demand side.
I know. I'm just trying on the optimist jacket here. I'm already doubting what I just said. So listeners, just forget that last thing that I've always been bearish. Anyway, two more topics before I let you go. The first, yeah, sure. Let's talk about Nigeria for a little bit. I saw that. Well, I'll let you set it up. What's got your attention on Nigeria right now?
Sure, it was a presidential election that didn't get a lot of attention really internationally, and it came with really low expectations. No one really thought new president, whoever they were going to do anything. But Bola Tinubu was elected, and basically from the jump started making huge reforms. And honestly, the reforms that I've thought Nigeria should be implementing for a long time. I've always been interested in Nigeria, found it fascinating. But I think the biggest reason is, and obviously this is very like selection bias because of the people that make it, to the West. But you meet Nigerian folks in the West, and they're just some of the hardest working, most brilliant people you've ever met. And a lot of that human capital is in Nigeria. It's not just people that have left. So I see the population growth, I see the natural resources, I see the human capital, and the potential for the human capital to be that much better. And they just have to get like a couple things a little bit right, and they can be wildly successful. Just the amount of people that don't even have electricity is still just huge. The infrastructure is terrible. So if you just make all that a little bit better, like the country could really start to do well. So I'll just rattle off all the things that the new president has done in his first couple months, and that is, so they had a fuel subsidy, which many developing countries have. It was $10 billion a year is what it costs them, which trust me is a lot for them. He got rid of that. Obviously, that made people really angry. The unions were all fired up about it. I figured no way that actually sticks. And then he negotiated with the unions, and they backed out, which surprised me and made me kind of take notice, like maybe this guy could get some stuff done. One of the big things, they had a crazy exchange rate system. They had like multiple exchange rates, big black market, really convoluted, run by the central bank, super corrupt. Well, they comes in, shuts all that down, floats the currency, gets rid of the central bank ahead and arrests him. Next thing, so when it comes to energy, he wants to reduce this role of state in energy. So wants to like basically triple oil production, get the national government out of it more, not like all the way to zero, but like let the private sector do more of this. The big problem for them is oil theft. So a lot of the oil they do produce gets stolen by not just all the crazies down in the Delta and terrorists and stuff, but like even they found people in the military doing it. So it's even within the state. So seem to be taking that more seriously and having a plan to fight that. He says he's targeting 6% growth once double electricity production. That stuff, maybe we'll see, but that's the right way to head. It's really hard for foreign investors to repatriate money out, and that's something they're already starting to work on and trying to reform. So I think they're building 2 new oil export terminals. They have a brand new massive oil refinery, which really helps them from a foreign currency perspective. That was not his doing it, and it took it was like a million years past its delivery date, but it's live now, and that could be a big benefit to them. So when I take a step back and look at this, it's going to be really painful for a few more months, really. If you're a regular person there, you don't have a fuel subsidy, or inflation's going to skyrocket. It's going to be painful. But on the back end of that, now you've done all the right things to attract foreign capital again. The president was just telling one of the U.S. diplomats, like, hey, it's time to help us make the energy transition. Give us some money. We'll get to work on this thing. So, and he's like, stop all the stupid like roadblocks. Let's make this work. Let's get to work on it now. So the guy has a finance background. He seems to be doing a lot of the right things. Whether it really shakes out, we'll see. But this is a really brilliant start in the first 2 months. And just going shock and awe on policy in your first 2 months while you have honeymoon, I think is pretty smart. So some of this sticks and starts to show some results for regular people in the country, then it gets to the point where like all the other political factions can't really go after him. But if he doesn't get the results early, which is scary from a perspective of global recession and oil prices, being sideways or down, then it may be really tough. Then it may be right back to the mess that Nigeria's been in for the last decade. But enough good things have happened in the last 2 months where I'm absolutely, taking notice and watching very carefully. I'm reading the news in Nigeria every day instead of once a month now. So.
Two other things that he's done. He got rid of the head of their corruption watchdog because of corruption. Yep. I loved that story. Yeah. And then this week, the big news is he's reorganizing security heads and things like that. So even the men with guns are changing behind the scenes. It's funny because I saw Blind Squirrel wrote about this and was tweeting at both of us. And I'm happy to say, I'll pat myself on the back here. I covered the Nigerian election in the SITREP. I've been covering things in Nigeria in general, and Blind Squirrel saluted me for saying that I was bullish. My foreign capital will not be going to work in Nigeria anytime soon. You can call me the biggest bear there in the history of the world. I've heard Nigeria before described as a poor man's India. And I think that's a charitable interpretation based on everything that's been going on in that country. I would much rather put capital to work in India. This is a country that just recently fell below Angola for top oil producer in Africa. Based on Nigeria's oil resources, that should not be the case. They have just not been able to do anything right. And if I'm usually the one who's talking about leaders, trying to strain against their geopolitical constraints and overcome the difficulties. And Tinubu he's definitely trying. I give him props for giving it a good effort here. But that's an awful lot of inert. Like, he's going to have to show me a lot more that these things can stick and that Nigeria can actually do some of these things that he's talking about before I'm going to get interested. But I will be the first to admit he is trying, which, that's more than we can say for a Nigerian president, probably going back decades. So maybe I'm too cavalier, but at least on the CI end, I think Blind Squirrel and anybody else,
a little more optimistic. But
why?
To your point, though, so the one thing I'll say that is a result so far was the fact that he got the unions to back down on the fuel subsidy. A lot of people said you can never take the fuel subsidy away. You can't do it. And I was one of those people that thought, that won't last. This is what really made me pay attention. I was like, if the unions are so on, that'll be gone in a week. And they kind of stuck. And I was like, oh, wait a second. Like, maybe this guy has a little more power than I think. But to your point, I mean, the tribal, the religious, there are so many factions, and the corruption is just so hardcore that it is tough to see this really working out, especially long term. Maybe it has a great 4 months or something, but to see this be sustainable, it is difficult. One of the countries I've always been the most bearish on in the world has always been South Africa, and basically for all the same reasons. It's the corruption is so hardcore, and that it's just very difficult to want to put money to work. This one, I don't know. Maybe it's just my innate love for Nigeria as a potential. that I just get romanticized into this over and over.
Hey, I hope I'm wrong. And I mean, I've been a little more constructive on South Africa, but you probably saw that South Africa is dealing with a cholera outbreak right now. And cholera is one of those things that if a country has a cholera outbreak, I'm like, things have to get really, really bad for you in the year 2023 to have a cholera outbreak. So the fact that South Africa is dealing with that right now, I've actually despite the fact that South Africa has all the minerals that everybody's going to want for the energy transition and anything else, in some ways their government has shown even less gumption than the Nigerian government. So, look, Nigeria has tons of potential on paper. I'm going to have to see a little bit more from the Nigerian government and these reforms being taken up before I'm going to get interested, because it's we've got too much recent history for me to dismiss. But for the sake of the Nigerian listeners, all three of you probably, I hope I'm wrong. I hope you definitely prove me wrong and force me to put my capital to work there as well. Last but not least, Chase, and we'll move to this quickly because the thunder is rolling in here in New Orleans, and that usually means my power. Here I am talking about Nigerian infrastructure, and I'm worried about my power just about to go out here in New Orleans. But I've recently gotten very constructive on natural gas. In the last couple of weeks, we even put on a long position here at CI. And it's one of those keep it simple, stupid arguments. I mean, we had a huge run up in natural gas last fall and last winter because people thought the Europeans were going to be freezing in the streets. I was very, very skeptical of that narrative, as you know, but didn't feel quite confident enough to sort of get involved. Now it's gone all the way. I mean, we're below where we were when there were the top concerns about the energy crisis. And it just looks it looks a little bit too low to me, considering, okay, we're going to have more natural gas demand in the United States. We're going to be exporting more going forward. I mean, it just seems a little overwrought. Things seem a little too complacent. And while I'm, for instance, very skeptical about oil right now, natural gas to me looks like it's sitting in a pretty low spot. Tell me, am I wrong, or do you also sniff the opportunity?
No, I love natural gas and have for a couple months now. And I thankfully, this is one of the things I got like right on both ends and played the run up and got out like almost like right near the top. I remember we hit double digits and $10 in the US. It just kind of became obvious. And then, like you said, the European narrative just spun completely out of control. And props to you. I remember you like in real time, pushing on that before I did. So that was a great call. But for me, I would like to see a little more heat on the East Coast to like really feel great about this. And so far, the weather models haven't really played ball there. I've been going with the catchphrase that summer is the new winter for natural gas. And I do still think that's true, that everyone's so used to thinking about gas in the winter. And in the US, the cooling demand and the electricity burn for gas is huge, especially with how cheap it is. It's part of the reason I like it is when it gets really cheap in America, we use the hell out of it to create electricity. So it almost has its own built-in buffer there. LNG exports are going to be great. Industrial use obviously is going to be a little bit of a concern for me with my cyclical forecast, but production started to fall, and it started to fall kind of quick. And if the rigs get laid down, and then a few months later you'll see the production numbers go. And rigs have been getting laid down hardcore in the last few months. We've had some of the biggest kind of week over week prints and rigs that are going away. So I think you're going to see production fall enough to like really support the price. And if you get enough heat, especially east of the Rockies, like we're only getting it in Texas right now, you'll start to see the power burn numbers make new all-time highs. They're close to highs right now, even though the East Coast is cool, which shows you how much of the grid is burning gas for electricity right now. So yeah, I'm very constructive. To me, it's mispriced at under $3. I think it belongs at $4 or $5 at the moment, and I think we can get back up to like $6 before the end of the year, something like that, which is a long ways from where we are now.
What's your favorite way to play it? Do you prefer pipelines or just the futures themselves? Or, I mean...
So my favorite way is definitely the futures. That's just the way I operate most of the time. I will say there are some companies out there that I like. I normally really shy away from talking about single names, but what I will say is look at some of the companies that have a lot of liquids exposure. Propane is dirt cheap right now. Some of these companies, they sell a lot of propane, right? They actually export a lot of it. So I think looking at some of the liquid heavy companies is something that can be very useful, because I think if you get a jump in propane prices, some of these companies that do both will just be great. And they're all cheap, they're all undervalued, and they're all, if you get the medium and smaller ones, they're all big takeover targets. So I think you might have that M&A wave that some of these middle tier companies get bought out at a big premium. So that's another reason I like some of the names that have liquids.
Medium term, I feel pretty good about this the next sort of 6 to 8 months, maybe even 12 months. Medium term, I'm a little more worried about this, and I wanted to get your take on this as well, because it seems to me the amount of LNG that's coming online from Qatar and the US and Australia, maybe some Canada by 2026, I mean, it's astronomical amounts. And I feel like the bull case with natural gas, in part, over the longer term, is that the United States is going to continue exporting, and that is going to bring U.S. prices more up into, you're going to get a convergence of natural gas prices with the U.S. exporting more and more. Is that actually going to happen though? Because when I look at the level of supply that is probably coming online by 26, 27, even with the amount of demand that is out there, I begin to doubt whether that's actually going to happen, and whether this is really more about there's going to be tightness in the market until you get to 26 and 27. And then it's just going to be, I mean, there's so much of it that it's maybe not going to be as exciting a market as we might think. What's your reaction to that?
It's a tough one. I think Henry Hub and like international LNG prices, I mean, I wouldn't be surprised if they converged. I wouldn't be surprised if they didn't. But a lot of supply coming online, but at the same time, a lot of these fields are in such rapid decline that I think we take for granted that, you can just extrapolate, what some of the fields are doing. And I don't think we can. I think the decline rates on some of these are bad. And some of the biggest basins may already be peaking. So maybe when we get to 26, 27, yeah, we're like adding capacity and stuff, but maybe just the basic physics of these fields keeps production from going too crazy. I know it's been very popular to assume that all the giant convergence in LNG price or in gas prices. I would say something more likely would be to have an LNG price and then a domestic price, and then need some sort of legislation to come in to like really regulate this better. Because if you don't do that, you're going to have a thing where everyone just wants to export it and they don't want to sell it domestically because the price difference, things like that. So I think you'll probably get a lot of government management of domestic prices, and not just in the U.S. but around the world, and then a LNG market that is there for all the kind of excess that above what you need to be a little more expensive. But even LNG, I think the price of that will be crazy until it kind of all flattens out. Like obviously Pakistan will love to get into LNG right now, they just can't. But at a better price they could, and I think 10 years from now the price probably is good enough for everyone that wants some LNG.
Is it more than a U.S. story for you then, for example? So should we be thinking about Australia and Qatar, and you've written about Argentina before? Like, are there other places, or Canada, or is this really just because the U.S. has so much of it? No, you're okay. All
of it. But like, I mean, I typically trade, Henry Held futures, so I think more about the U.S. But yeah, if you want to get in the game of some of the companies that are doing this, I think, I mean, what a great business to have a company that produces and exports gas in Australia. I mean, there's so many people in our neighborhood that are going to need it more than they need it. They're going to make a lot of money, I think. And even though it's not just these U.S. energy producers that are seem really undervalued when you do the analysis, I think a lot of people still think we don't really need gas in 10, 15 years because, everyone's got a windmill or whatever. But I think gas is going to be one of the last things to go. So we haven't almost given up coal yet. So I think gas is going to be a big part of the future for the next at least 20 years. And so I think some of the valuations on some of these companies that seem to price it almost like a cliff don't make sense. So yeah, some of the big producers in Australia, Canada, if they ever really build out the export infrastructure, which who knows, obviously Qatar is just a mammoth when it comes to gas. Like, I don't think there's really even a wrong way to play it. Absolutely.
The question I'm about to ask you could be a whole nother episode, but I'll get you out of here on this last question, which is I've been doing a lot of research lately on renewable diesel and sustainable aviation fuel and biofuels kind of in general. Do you have a view on sort of corn and soybeans and the SAF and renewable diesel and that whole thing, and how it fits with natural gas and in the hydrocarbon conversation? Because while there's a lot of discussion about wind and solar and hydrogen and nuclear and all these great things, those things are all years away. And, those who are building, there are companies that are building huge crushing facilities in the Midwest because, they have soybeans and they have corn they can use for cleaner biofuels right now. Do you think that's part of this mix, or have you thought at all about that?
Only a little bit. I'm not going to act like it's been more, but I will say about almost 20 years ago, I worked on B1 polymers, and I still remember we had an experimental flight where we had one use some sort of bio jet fuel. So we've been messing with it for a long time, that I can tell you. It's always made me uncomfortable to use food for fuels that we have that we can essentially create at a better price, and really just as, I don't know, efficiently. It's always been weird to me. Like, I don't know, do we have enough food to use the food for gas? It's just always been strange to me, but I expect it to be part of the mix moving forward for sure. But I haven't done a deep enough dive to have a really educated opinion on the role it's going to play moving forward.
Fair enough. Chase, thanks for making the time. And I don't know what's going on in Cleveland sports right now. Are you looking forward to the Browns season coming ahead? I don't even know where the Guardians are at. I'm just rejoicing in my Braves right now. But
so the Guardians are terrible, but the good news is we're in a truly horrific division. So we're still in this thing, even though we're not very good. So because of that, I'm still keeping a close eye on baseball and hoping we can just put it together and make another run. I am very excited about on the football side. The Browns have a very much loaded roster. I think we're having a lot less drama going into the season this year. So there was a year for the Browns to kind of surprise everyone. It's this year from a pure talent perspective, and from the one thing we never ever have is continuity. And it's like the longest tenure we've had from like a coach and a GM and a lot of the key players that have just been around for a while now. So keep an eye out for the Browns to surprise some folks. But we are, unlike the Guardians, in a very, very tough division. So it makes it difficult.
Yeah, I have trouble even getting up for football anymore because I'm an Atlanta Falcons fan, number one, which, that's the first terrible thing that happened to me in my life. And second of all, I live in New Orleans, so I'm surrounded by these Saints fans who like to pick on me, even though like we've literally never won anything and they always seem to kick our butts. So I'm just, maybe I'll go take up horse racing with Jokic in Serbia. That sounds like a better use of my time. So until then, he seemed pretty excited
to get out of town. So it must be really good.
I loved every single minute of his post championship thing. I don't know if you also saw he went back to Serbia for his horse racing on Sunday. Refused to give interviews. Said he'd had enough. He didn't want to talk to anybody locally. Like
the mean comparison of him like awkwardly standing in the corner having his drink was hilarious. The whole time he really didn't seem that excited about winning a championship. It was something to behold. He's special.
I know the listeners are hanging on my every tweet about my pickup basketball adventures, but I will say the first time I played pickup after the Nuggets won, it was the most fun I've had playing pickup in years because everybody was passing and moving and cutting. And I tweeted, maybe this is the beginning of a revolution in pickup basketball. I can report after this weekend, it's not. The ball hogs are back. Everybody's jacking up threes again and wants to be,
it's just, threes and drive and no mid range, no passing, no screens, no boxing out for a rebound, no fundamentals, right?
No,
we're back to that.
I ended up yelling at a high school kid on Father's Day because he wasn't passing me the ball. That's how bad things got for me this weekend. But on that sour note, Chase. Oh no, go ahead, finish off.
No, I was gonna say pickup is always a nightmare. But what the beauty of it though is like because there's no fundamentals. As the old chubby white guy, I can get like 12 rebounds because no one cares about rebounds. So that's the one good thing.
Yeah. Well, I'll have to come play with you in the Pacific Northwest. But until then,
let's do it.
We'll talk to you soon.
All right, sounds good.
Thank you so much for listening to the Cognitive Dissidence podcast brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.